we often move to weakening, and utilities is showing us how it can go from weakening down here to lagging the rest of the market. Currently, utilities far behind. What's improving? We're seeing consumer discretionary starting to bring its way back up into the forefront, but so far it hasn't gained a lot of positive price relativity. So far, it's just adding a little bit of momentum, speeding up, catching up to the rest of the market. Maybe we'll have a chance to join information technology here to the right. Amongst all of these different red arrows and dots is hidden in here materials. Materials is the one that we're going to focus on today. It's the longest since we've reviewed that particular sector, but we're going to talk a lot about the other pieces of the market as well, because it turns out materials is one of the smaller pieces of the puzzle. I'll show you that graphically here in just a moment. But nonetheless, materials finding itself currently in the lagging stage as well. Next, we're going to go ahead and jump in and take a look at our sector performance sheet. So here's what we're going to look at first is our year-to-date update. So here is our year-to-date performance. This is a graph that I make custom for you each week. And as you see, the S&P 500, as of first thing this morning, is up about 15% since the turn of the year. A phenomenal start to the year. We're almost halfway through it. If we were to match that performance point for point, we'd be up about 30% by the end of the year, and that would be a remarkable year. If we go ahead and glance backwards, this is what the year 2023 looked like. It was a 25% positive year. But you'll notice as we look in 2023, it came almost exclusively on the backs of information technology, communication services, and consumer discretionary. It was these three sectors that allowed for that absolutely astounding positive price performance for the S&P 500. Bringing it back to present, we see we have a little better dispersion, a little more positivity from the remainder, but nonetheless, information technology, again, pushing substantially higher. It itself is over 30% up for the year already. Communication services not far behind at 24%, maintaining its absence, as has been the case for most of this year. Consumer discretionary not showing up in the same way as it did last year. Perhaps a turning of the tides and a change in the economic forefront, showing a bit of an adjustment there in where folks are willing to spend their money and the profits that those companies are able to bring in. However, last year, 2023, utilities was negative. It has found its way several times into amongst the top performers. If we go ahead and line these up tallest to shortest, we've got information technology, communication services, followed by financials, staples, and then utilities, right here in the middle of the road. So much better year this year for utilities than in the past. And as we go ahead and glance over here, our sole underperformer is real estate, but it too has made up some strides. It's now only down 5%, whereas it was down as much as 10% year to date at some of our previous updates. Next one, so we go ahead and jump in, is this here. We've got our yearly updates, diving through and taking a look at where our price performance has come through for each one of these. It looks like my title didn't update properly, as this is saying yearly. This is really a monthly update. I'll make sure I fix that up here for next time. But as we take a look on here, folks, we see that our monthly price performance for just the month of June is up the S&P 500 4%. But here's the standout, folks. Information technology up over 12% for the month. Remember, it's up 30% for the year. So almost half of its positive price performance has come in the last 18 days, folks. That is astounding and a huge push higher for information technology. It has, of course, had runs very positive in the past, but it also has had some severe pullbacks. However, June across the board, not nearly as rosy a picture as has been the year to date, where we see energy, financials, materials, industrials, and utilities negative for the month. June, not quite so positive. Here's where we ended out for May with almost everything up. Energy, the sole discrepancy. But as we come over and take a look, information technology notching that positive, but we had utilities losing 5%. Materials, our area of focus for today, down 2%. Industrials, financials, and energy also off. Nonetheless, real estate, like I said, started to make up a little bit of lost ground, and consumer discretionary making up just a hair as well. But nonetheless, there is only one sector that beat the S&P 500 so far in the month of June, and that has been our information technology. If we go ahead and glance back 1 month further to the April look, we can see April was almost everything down, but in that case, utilities was the only one moving upwards. I think that's probably enough historical on this particular viewpoint, but our next topic is going to be jumping through and taking a look at similar information, but now broken up where we can see the relative size of each one of these in the marketplace. So this is a custom-built heat map that I put together for us to take a look at the last 5 days worth of price history is what we're looking at right here as of yesterday's close. And then we'll also take a look at it over the course of the last 4 weeks. Over the last 5 days, the last 1 week, the bright green areas are the ones that are extremely positive. And you can see that includes automobiles up 6%, specialty retail up 4.5%, Netflix notching 5% positive, but the real standout here is everything in information technology. That last week's worth of price improvement has certainly pushed things in that same direction as we saw on some of those most recent graphs. But within information technology, the biggest performers have been NVIDIA, Microsoft, and Apple. Apple up 12% over the last week. NVIDIA up 7.5%, 27% though for Broadcom. Nonetheless, all across the board, information technology doing a phenomenal job. The sole underperformer in that area, CRM or Salesforce, losing pretty heavily. If we back this up just a little bit and instead look at the last 4 weeks worth of data, so now 1 month look back, how are we doing? Well, the same ones show up pretty positively, including NVIDIA now at 38% positive, Broadcom 30% positive, Apple up 13%, Oracle 13%. But if we go ahead and zoom over here to the right-hand side, you can see that materials, our area of focus, has not been quite as well treated over the course of the last month. There is metals and mining off 10% as an industry. We've got container packaging up 0.3, but that's only because International Paper, IP, is up 10% over the course of that period, doing a handsome job of trying to recover for some of these others that are down 4 and 5% across the board. A lot of ups, but mostly downs looking over the course of the last month for the materials sector. If we go ahead and take a look next at some of our data that we've got courtesy of FactSet. That first resource, this one here, folks, comes from Bloomberg. If you enjoy data like this, extra visuals, things that help explain a little bit more about what's happening in the market, please let me know in the comments. We have these on a trial basis right now, and we'll only get to keep them based upon your feedback. So go ahead and send something in if this is something you enjoy seeing and understanding a little better. Right now, we're looking at a breakdown for the materials sector, telling us how precisely its revenue is broken down. Last week we talked, or 2 weeks ago, I guess at this point, we talked all about the healthcare sector. And at that point, we learned that the healthcare sector relies on over 70% of its revenue from the United States. You can see that is very, very different here for materials, where only about half, in fact, slightly less than half of its income is instead coming from the US. And if we were to add in Canada, add in Mexico, we get a little bit greater. The Americas as a whole at 58.7%, but nonetheless, it has a lot of exposure to the various parts of the market. And if we divide it up by what types of economies it's getting its income from, it turns out it gets quite a bit, 75% from developing economies. That's what it's historically been called the third world. So developing economies is certainly a large portion of the revenue stream for the material sector. We'll continue to see how this compares against some of the other sectors in coming weeks, assuming we're able to keep this data long term. So again, if this is useful to you, find this interesting, let me know in the comments. I'll make sure that we see if we can't keep it around. Next, if we think about where the energy or the materials sector derives its income, it is almost exclusively from materials related activities. So this is the non-energy materials, meaning it's not looking at oil, it's looking at all the other types of materials, and that's our chemicals, that's commodities, that's everything else except for oil and natural gas type energy. And as we look at this, it does focus pretty clearly in here. These companies are not what you would call diverse. Rather, instead, they are very focused in their efforts in a specific category and income operation. Looking over the long term, here we've got the same graph I showed a couple weeks ago, but this one now for materials, where we looked at it last time for healthcare. I got at least one comment last time that this graph looked like it was a little bit busy, a little bit too much going on. Let me walk us through it a little bit more clearly this time around. Focus for me on this 20-year average, where we see each month's average performance over time. The green ones are, of course, positive. The reds are negative. We can see June has historically been a negative month for the materials sector. And indeed, that's what we are seeing represented today at so far off almost 3% in the materials sector. As we glance down here, I thought it was interesting to note that there was a stretch of 1, 2, 3, 4, 5, 6, 7 years in a row during which there could not be a single positive month for materials in the month of June. So remarkable performance there. But nonetheless, we also see a similar streak of positivity, this one even longer. I believe it was 9 months, 9 years, 1, 2, 3, 4, 5, 6, 7, 8. Yeah, 9 years in a row of positive performance in the month of November. So does the material sector demonstrates some seasonality? Yes, it does. There is some elements of it. And if we were to take a look at this, we certainly are seeing that this month we're following along, maybe even adding to that trend. Whereas in other years, we'll see if we follow suit or not. April, we deviated from it compared to the average. Now, this is one version of this one from FactSet. The same data is represented right here. The only thing different here, this one comes from Bloomberg, and tell me which of these you like, better or worse. The thing I like about this one, in addition, I like the darker colors, a little easier on my eyes personally, but focus up here, 20-year average is included, but also the 20-year high and lows are going to be included as well. In this case, I pulled the data not for the materials sector, but here we're looking at for the S&P 500 as a whole. So this is similar data. If you like the inclusion of highs and lows to see those extremes pointed out to you, let me know and we can think about adding those. But I won't spend any more of our precious time together on that specific visual. Next one. Here we're looking at our relative performance of the materials sector against the S&P 500. The materials sector currently represents about 2% of the S&P 500 by market capitalization. That puts it behind about 5 or 6 industries inside of other sectors. So it is definitely a small piece, but we include it because it is so different than many of the others. Unfortunately, different doesn't always mean better. And in this case, looking all the way back to 1990, it has an average annual compound growth rate. Remember, that's what we call the CAGR, the compound annual growth rate of 8.32%. yielding a substantial return. From $100, you would have turned into $1,400 of profit, 14 times your original investment. However, during that same period, an investment in the S&P 500 would have made you 30 times, not 14 times, at an average rate of 10.49%. So definitely over the last 30 years, we've seen substantial underperformance from materials against the S&P 500. However, if we go ahead and look in the nearer term, we see that some of that outperformance happened long ago. And then from 2019 into 2020, 2021, 2022, notice how my green and blue lines are moving neck and neck, no deviation one from the other. And only starting in 2023 and really changing at the end of 2023, when the S&P 500 put on the rocket boosters, it left materials behind. That's when the most recent underperformance has shown up. Nonetheless, you've doubled your money on materials and on the S&P 500 over the last 5 years if you're an investor in either portion. Both of these are looking at the total return, which is going to include our dividends being reinvested over time. That's our look at some of the historical long-term performance. But let's then understand our current status. How do we sit currently in terms of the value of the sector? For that, we're going to look at the price to earnings ratio. How much are we paying for the earnings that exist presently? This is our last 12 months worth of price and earnings. And looking down here, we're looking at the next 12 months. So looking at the forward estimates. And we see that right now, we're about middle of the road in terms of trailing 12, looking backwards, historical earnings and their price to earnings ratio at 22.3. Whereas if we look down here on the forward estimates, we're at about the higher end of the range, and we notice a very big deviation back here in the 2008-2009 period. Things went really wacky with the materials valuations during that time frame, where companies were being paid substantially more as their earnings dropped off substantially in a quick fashion. That resulted in high price to earnings ratios that eventually normalized out. But excluding this huge peak resultant in the financial recession, if we go ahead and look at the present value at 19.7, it is amongst the highest we've seen since before the turning of the century. Definitely, we are at relative highs in terms of expensiveness on terms of forward estimates for the materials sector currently. So if we understand all of this and want to dive a little deeper, here's where we're going to see its earnings related material. Every single stock within the materials sector has already released its earnings. In fact, there is save one stock left waiting to release its earnings. It comes out later this week. Reporting Kroger is the one that's last in line to report their earnings for this particular earnings season. And as we take a look, materials did pretty well all told, beating estimates on a large portion of their earnings, though I neglected to include it on this particular screenshot. So that's what we're looking at. It's already released its earnings, and we've got a lot of that data popping up for us. Next, we're going to go ahead and jump over to my custom built stock screener. Here we've got this. So this uses the data from Fidelity's stock screener. I download that data and then just slice it up a little bit to serve back to you and to me in a little more palatable format. Here's where we can see that, yes, materials does represent just a tiny little 2% of the market. And as I mentioned, that makes it smaller than some of the other industries. For fun, I went ahead and measured out the relative size of each of the sectors. You can see interactive media represents 7% of the market cap of the S&P 500, whereas semiconductors and software are over 10% each, substantial portions of the pieces of the puzzle, whereas materials are little materials at 2% is a smaller piece of the puzzle. but it's in here and listed separately because of how different it is. The chemicals, the construction materials, containers and packaging, and metals and mining, all the different commodities and materials that aren't part of producing energy get lumped in here, and we can see that results in a very different set of returns. Some of them yield pretty decent dividend yields, including 2.7% for the containers and packaging. And as we look over here, some of those returns have been pretty admirable as well. If we had focused instead on construction materials instead of containers and packaging, that would have certainly outperformed the S&P 500 during that same time frame we looked at over the course of the last few years. Going over here and taking a look at the different stocks that make up the sector, we've got a few that perhaps look familiar, including Freeport-McMoRan. We looked at that last time we went through this. We've got Newmont Mining. We've got Sherwin-Williams, and several others that perhaps you do recognize. But we're going to go ahead and jump over now to our stock charts and take a closer look at how this has performed recently. We're going to start by using XLB, the ETF from State Street, focused on the materials sector, to represent how this has been going overall for the sector. And you can see strong upwards tilt over the course of the last 8 months or so, going back to October. But as we connect our trend lines in a similar fashion to what we did on the S&P 500, we note that today we bounced right off the very line that's been drawn in here. So certainly this would be a line to have on your chart if you're interested in or have exposure in the materials sector. Most recent momentum has been negative. However, we have found our footing, at least for a moment, and have tried to hold above this trend line for today. Watch out for tomorrow. Be aware of this, as any further selling is likely to exacerbate in a relatively quick fashion as any additional support deteriorates. As we go ahead and dive in and take a look, I've pulled up the 3 top or worst performers over the course of the last 3 months since we looked at this sector last. International Paper is actually one of those. And when I look at this chart, International Paper calls out to me as a horizontal chart. And so I've drawn in here exclusively horizontal lines. So many horizontal points of support and resistance showing up on the chart. Currently, having fought its way up some 50% or so since its earnings just in April, marching its way upwards now to $46 per share and fighting with recent highs. Amazing run for International Paper, the top performer within the sector over the course of the last 13 weeks or 3 months or so. Next in line was Newmont Corporation, a miner itself, where it's had a pretty strong upwards trend that is now broken. And it's trying to find and hold its footing right here at the $40 per share mark. If it can hold on above $40 per share, perhaps there's reason to hope that the downtrend is over. We are pushing above it so far today. A close on the north side of that red line would certainly be a positive thing. You want it at minimum to stay above the blue line. At best, continue forward and upwards, fighting towards an ever higher value for Newmont Mining if you're watching it. Albemarle is our last one we're going to go ahead and glance over at as we wrap things up for the day. This one, a very different chart. Worst performer in the sector over the course of the last 3 months. And you can see that it's not just been 3 months of downwards direction. Rather, we had a full 45% decrease from the highs over here in July of last year. Huge sell-off in Albemarle. It flattened out for a while, but unfortunately, most recent price action pushing it down now below $100 per share, dropping below its previous support at about $108 per share. If I back my chart up 5 years, we can see this isn't the first time we've been in these lower dollar amounts, but it is the first time we have done so since 2020. You're going to have to put your COVID mask back on to remember what it was like to see Albemarle at these prices. So not what you would like to see as a bull looking at Albemarle. Instead, seeing a substantial sell-off and an additional break-off, and through support, selling may continue as we watch this along the way. Folks, that was a quick rundown of the materials sector, but it was a lot of material, I recognize, to present in such a short time frame. Doing so meant I had to hold your questions all the way until now at the end. So if you are under a time crunch, I encourage you to head on your way. Thank you so much for being with me, and I hope you'll join me back here next week, back to our regular schedule, Wednesdays at noon. I'll be back here with you to talk about additional sectors and dive deep and, of course, update you on all of these pieces. All right, I'll go ahead and read through these questions and answer them, but do be patient with me as I read through them. Russell, you were wondering about the source for the new sector rotation chart. This one comes from Bloomberg. The same data is being pulled in, but this one from Bloomberg. The reason I favor it, even though it is a little darker, I like that it is real time. This shows as of today, whereas the previous one would have neglected the most recent price movement, especially on a big moving day. That can be a substantial difference, but that's the main change here as we look at this one versus others. Bloomberg is a paid service. It's rather pricey. All right, next one. We had a question saying consumer discretion often leads us the way out of lower markets. So are we surprised that it is high right now? Well, as we looked at some of those other graphics, I think we can all agree that the recent performance of consumer discretionary, unfortunately, has not been remarkably high. So the fact that the market as a whole is high without consumer discretionary certainly is one reason for concern. The bigger concern for me is the fact that essentially we're relying exclusively on information technology and communication services, meaning that if anything big stumbles here, you're looking at your Apples and NVIDIAs that have each added 10+% over the course of the last month. If that stops and instead they turn tail, move the other direction, well, you can bet that that's going to topple all the rest of these dominoes when those big boys fall down. So that's certainly the big area of concern as we look. Let's see. Okay. It looks like some positive feedback, mostly regarding the different updates. Okay, thank you very much. You can bet I'm going to try and leverage that to keep them if I can. I love them. Okay. All right. Excellent. Russell, I hope that makes sense now on the difference between that sector rotation. It's mostly the real-time nature of those. It also is consistent. Pulling the other one usually took me several minutes in order to get that in a format that I liked to present to you in a consistent fashion, whereas this is going to be much more reliable in that way for my own selfishness. Okay. Kevin, you asked about why China wasn't listed on the material source. It is. It actually was the second one on here. So we've got United States representing 48%. China was next, mainland China, at I think it was about 10% or so. If we list it down here at the bottom, including with the other Asia Pacific areas, 18% of its revenue is coming from China. So certainly it is, but not the top source. Okay. Yeah, Bill, I have a much better format for that 20-year average row. We'll make that much larger so we see that. Okay. And it looks like a few of you agree the darker version. Okay, so I'll use the Bloomberg darker version of this one, and I'll increase the font size so that we can see it. It'll mean I'll have to drop off some of these others or kind of tweak it around, but I'll make that work for us. Okay. Stephen, I won't have time to talk too much about consumer discretionary beyond what we have already done for today, but it is coming up on the list of what we need to cover again. So you won't have to wait too much longer, I think, as we work through these. Okay. Tom, I don't follow international paper with great scrutiny, so I couldn't say precisely why. It was not the only equity that was up inside of materials. There was several that were positive. Let's see if I still have this active. Here is the positive performers, or rather everything in the materials sector positive, sorted by their returns over the last 13 weeks. International paper tops it at 30%, but you can see there was quite a few. In fact, the majority positive, and those that were negative weren't quite as negative as our massive 30% up. Nonetheless, it was about a 50-50 split. Okay. All right. I think I wrapped up all of the questions. I'll continue here in the background reading through your comments, making sure I can appropriately address them in the future. Dennis, you were asking when my next Excel class is. I will be showing how to build this Excel spreadsheet coming up on, I believe it is on the 24th. Yes, Monday. Monday is when I'll be back to do that. Let me double check the time for you. But if anybody's interested in having access to this spreadsheet where you can build it and update it yourself, it's going to allow us to just change this over here. Let's suppose we want to look at financials. These are now the industries inside of financials, all of the details there, and the individual stocks. If that's something you're interested in, I will show you step by step how to build that on Monday, the 24th, and the time for that class is at 2:30 Eastern time. I think that will have to wrap it up in terms of questions. I think we got most of it coming up. Um, but thank you so much for your comments. I'll be reading through them and doing my best to incorporate them on the long term. But thank you so much for all your time. We appreciate you joining with us. I hope to see you back here very soon. Tomorrow, we've got the day off. I hope you get a break as well. Until then, take care.